Let's talk charts. Technical work coming from Ben Watson, the chart master. We're going to begin with the rails, Union Pacific on an upgrade. Ben, I misspoke coming in. Not a downgrade. Union Pacific gets some love from Bank of America, but it's already pretty much at the highs.
Yeah, it is, Oliver. The transport sector in general has had its challenges. We talked a little bit about Delta Airlines last night, and we've seen what's going on with them this morning. The rails have been a little bit different because they've played out over the stage of all of the trade and tariff issues that have challenged not only this stock, but also the other rail companies as well. Generally, an overall sideways trend that we can see on this particular chart of Union Pacific until we get to about mid-year. And let's see if we can zoom back in here to that section of the chart. We'll bring it right back here and clear that out. We'll just zoom right here. This area right here becomes our area of focus. Okay. Because what's going on, since this earnings miss, but with some pretty good guidance, the stock starts to rally. Then we get up into this horizontal resistance that's been tested once, twice, 3 times, now really 4 times, and we get a failed breakout, Oliver. There was this kind of resumption of an uptrend overall in transports in general, but now we're seeing maybe a little bit of a challenge to that. But this upgrade takes the stock just barely above this resistance right around that 181 mark. But notice where that level of support is down here right around 180-ish or so. If we get that bounce up off of that support, we could see that move right up into that 185 mark if this continues to make that move. The challenge, though, Oliver, comes in the fact that because we've got an earnings announcement over the horizon, and this last earnings announcement was a miss, that intermediate term sentiment seems to be falling off a little bit. So investors may be a little bit wary going into this time period.
Yeah, all right. So the Bank of America move here is one that I think is pretty interesting, given the fact that we're near the highs. CSX, which was an early leader, came off pretty hard over the past 6 months. Really, It was the summer report on their earnings that tanked those shares. So they're pretty far off the highs, but still, over the last quarter, most of them have been pushing upwards. Just depends how much relative to their own chart. The move here from Bank of America, upgrading it to the buy, pretty strong relative to some of its other coverage. They had it at a market neutral. So we'll keep an eye on that. Ben, let's keep it going here. I want to talk Cisco, not the tech company. Let's talk some food delivery, SYY. This is an incredible company because I feel like it gets so little attention for the extraordinary run that it's had. I mean, who wants to get in the way of this chart?
Yeah, no, I think you're absolutely right. And this is, we've talked a few times here recently about some of these stocks that have been overlooked by maybe the general public. These aren't the headline names, but they've been just cranking out the price returns and price appreciation. Now, Cisco, this is a long-term uptrend. If we were to go to a longer-term chart, you would see that as well. We can see that playing itself out in the restaurant space as well, and the success in that area. But one of the challenges here is that rather than seeing this very, very strong rally, we're starting to see maybe a little bit of weakness in this uptrend as this pulls up into what we call a rising wedge. And you and I have talked about this before, but I want to demonstrate this really quickly. A rising wedge is where your resistance and your support levels are both going up, but they're getting closer together. They're further apart here, closer together here. That suggests that buyers are willing to buy at higher and higher prices. Sellers are letting the price come up a little bit before they sell, but that may allow those buyers to become exhausted. Then the presumption is that the price falls out of the edge of the wedge. It kind of dribbles off the edge here and falls out in a short to intermediate term bearish pattern. So this has bearish implications. On the downgrade today, we see that playing itself out. We see price breaking that diagonal uptrend line. It could move all the way down to this target right around the 78.79 mark, just under that $80 mark, which was a level of support before. That could be the bearish target on this rising wedge.
All right, well, if the thing wasn't bullish enough already, how about an analyst downgrading the price target to $7 above where it trades. So not exactly the most worrisome cut for Cisco here. As we see the stock trade at 83 bucks. Piper Sandler put it on a neutral, says that it's only going to make its way to $90, Ben. All right, you got one more for us. You're going to talk some Kinder Morgan, right?
For sure. So Kinder Morgan, again, this is a stock that moves in a fairly narrow range. You can see that generally this channel that we've described here on the chart, really that has been taking up the majority of the year, is really only about 3 points wide. So it's deceptively large here on the chart. That midpoint of the channel, let me not zoom in, let's just draw the line here. That midpoint of the channel comes in here right around 2075 or so. And that midpoint has really kind of been the oscillation point. But we saw this pullback post the earnings. This was in the middle of this last earnings cycle, pulls back to this lower channel line just above the 19 mark. We get a very strong rally up, a little bit of a bull flag. But now the question is, notice these candles here right at the end, Oliver, as we get into this time frame right here. I'm just going to zoom in. And you notice that these are shadows top and bottom on these last couple of candles, very narrow bodies relative to what they were previously. That's an indication that there might be a little bit of price discovery, buyers and sellers trying to find where that consensus is, and it's right here around this resistance level. So if the consensus is, and with new information coming in, bullish, it could use that as a level and bounce. If not, it could break down. Look for it to come down to that mid-channel support level that we had before.
Yeah, all right. And a neutral rating for KMI this morning, Ben. Barclays just keeps the price target unchanged at 23 bucks. So we'll see if Kinder Morgan can continue to find some elevation. But we'll see what happens with crude, right? Because it's been a rough couple sessions for crude since the unwind of Middle East tension, Ben. But obviously, we've seen copper still running too, so maybe that overall cyclical trade will make its way back to commodities. Kinder Morgan can benefit. Ben, appreciate it. Nice work here on the charts. Thank you, sir.